Hello, everybody. Welcome to Market Moves. I'm Jason DiLorenzo. With me, as always, is Jay, aka Dark Matter, and our special guest, Samantha LaDuc, founder of LaDucTrading. Samantha, how are you?
Happy Monday. Good to be together with you gentlemen again. I appreciate it.
Yeah, same here.
Oh, yeah, it's great seeing you. You provide so much to our show. But you only been on here one other time. So maybe if you want to give us a quick introduction as to who you are and what you're doing, that'd be great.
All right. My name is Samantha LaDuc. I'm founder of LaDucTrading.com, and I run primarily a financial research firm. I've got a fabulous trading desk of 10. We cover everything from macro to micro. I mean, from classical economics to futures and day trading. And everything in between, swing, trend, options, a big emphasis on options, both education, analysis, which is why we are partnering, and as well as trade setups. So that's it, LaDucTrading.com, and very excited that we get to partner a little bit as it relates to market structure and figuring out where market direction is going next. And your stuff complements very well with our stuff, long story short.
Yeah, we'll talk about that a little bit more because I know that Jay has a little bit of a hard stop. So
let's go.
So Jay, take us away.
Yeah, definitely. Thank you again, Samantha, for joining us. Let me go ahead. I forgot to present my screen today. It's one of those Mondays, right? So it probably helps us. We know what we're looking at. So let's just jump in here. So Samantha, just for your just FYI, kind of go through a trade plan here on what we should look out for the week. So I'll ask you a couple of questions here. But before I do that, let me kind of just give you my tone and assessment of what I'm looking at for the week. So obviously, we've got some downside pressure, massive gap down, as expected here. From a dealer positioning, what we're kind of looking at here in Vol.Land, the big level here this morning is the zone between 58.80 and 58.50. You're just going to see a lot of gamma, a lot of delta, a lot of Vanna resides just in this section here. So it's all about volatility this morning is my call out for everyone. Specifically, what I'm kind of looking at is we hold 58.80. I think we can bounce back towards 59.25. We do not hold that. It's an easy rip of 30 points, some gamma there. That'll get us right down to 58.50 then. And that's where, things can really get cooking. If we start losing 58.50, I would stay away completely from that bear move that is going to be coming. So I'll quickly pause. Any thoughts there?
For me, for ES, I have a line in the sand, which was on April 23rd. We got above a particular liquidity level, and it was very, very important. So I had a price target of exactly 59.28. 0.25 in the E-minis. So long story short, we made it there on Tuesday. So after that momentous kind of gap up on May 12th because of the trade de-escalation talk. But long story short, that's my line in the sand. Above that is bullish. So we get back above that 59.28, let's call it. We're going to push into 61.27. If we stay below 59.28, and we're down there by a hair this morning, I know SPX is more dramatic, but I'm going to use that because it has worked so well as a price target to stay long. Anyway, we have 56.8750 for ES, which is a gap fill in futures. And rarely do we have a gap fill that does not get filled. So then so you have your line in the sand, that's mine. So if we're going to stay below 59.28, we are going to press and we are going to fill 56.8750.
We are super aligned. I love it. I love how aligned we were there. So
and if we're going to stay back above, we're going to go up to 61.27. So
yes.
Yeah, I was talking about that with Jay last week, how over this June timeframe, we can actually challenge all-time highs. As crazy as it seems.
Nope, and, I'm with you.
Yeah, and 5,900 SPX is when our like real support starts. And so anywhere between that, I think, and if correct me if I'm wrong, Jay, but between there and your line in the sand, I think that's those are the big areas for me. So
yeah, I would definitely agree, and we kind of see
it's just
that
like 59.28 and 5,900 are about the same.
Yeah. Yeah, no, we definitely have some support there, Vanna.
Mhm.
If we get some volatility here, looking at the VIX futures, I do see some retracement here this morning after, the Moody's downgrade. So we get a little bit more volatility crush. Never say never, right? In this zone we've been kind of trading overnight, it can quickly become a consolidation zone and we bounce right out of it as well. So definitely something to keep an eye. For this week, let me keep rolling here. Data release wise, not a whole lot. Today is full of Fed speakers. Tomorrow, full of Fed speakers. Wednesday, we do have, UK inflation rate. The US 20-year bond auction will also be there Wednesday. So I think that's a big one to keep an eye out for. I think that's around 1 p.m. Eastern. And then Thursday, you got the UK manufacturing and services PMI, U.S. existing home sales, the U.S. manufacturing and services PMI, and we wrap up the week with new home sales and the U.K. retail sales. So
you missed one. Jobless claims Thursday morning every week. It's my favorite. It's my favorite.
Thank you. So I what I would love to hear from you, Samantha, this is kind of a week that, outside of maybe a Trump tweet of some kind or whatever administrative statement, this might be another week where we get a volatility to kind of crush, and maybe we do get that push up back as we were talking, if we can, flip that 59.28, as you were saying. What are your thoughts?
I think, we started last week with that gap up and short covering, which was, extravaganza, right? I mean, Goldman said it was the largest net buying day in 5 years, a 3.7 sigma move. It was definitely, they said short covers were 1.6 to 1. It was pretty clear that it continued into Tuesday and then kind of softened. And then we had OPEX on Friday. So not a surprise that then all the calls come off the board and we get a little ability here to shake and bake this week. But otherwise, I do see support for June. And as it relates to the Moody's downgrade, this is typically right before. This is the third time now with S&P in 2011, with Fitch August 1st, 2023, which I was laser sharp focused on at that particular time because I had just finished a QRA, which is the quarterly refunding announcement, on the day before, where Yellen did issue more longer duration notes and bonds than bills. So that's basically contributed the double whammy, if you will, into a pullback into the November 1st, what I affectionately call the Yellen, the Fed pause and the Yellen Yahtzee, where she then issued the shorter duration stuff, which is liquidity providing. And the rest, as they say, is history, because you can look at every single, chart. And we put a bottom on November 1st and went hot fire flames into the end of December. So it could result for sure on a little bit more shake and bake on this downgrade. But so far, the most important chart that I have is the 10-year. So we do have a reemergence from a 10 and 2 year yield curve flattener back into a steepener a little bit. But more importantly, that 10-year moving higher, we're still not in danger zone. Danger zone is once we hit 4.76 and really stick the landing of 4.8% in the 10-year, then equities are going to hit a big wall again. But until then, unfortunately, I see a lot more chop in June. I see possibly this those two levels I just gave you, right, on the downside. Then they're going to try and bid this back up maybe sooner rather than later into that all-time high. But for right now, we're going to work out this downgrade that came just before a debt ceiling concern. It happened in 2011. It happened in 2023. That those S&P and Fitch, and now it's Moody's playing catch up. But the point is, we have another big macro event risk, which is this funding of our exorbitant fiscal spending. And right now, some hawks have a little bit more terra firma to push back, given the Moody's downgrade. But ultimately, Trump is going to come in and push this through come hell or high water, because his continuation of tax cuts are part and parcel. They're job number one. They're job number one. So, and that oftentimes people are like, why is it so important? It helps Main Street. It helps Wall Street more than Main Street. But the point is that if we don't get the tax cuts, then we have like a much, much stronger recession impulse, because that's just the nature of the beast. So we have basically that to look forward to. DC drama until July. Bring it right to the precipice again and try and force the tax cuts with the debt ceiling raise, all before the Treasury runs out of money.
Yeah, I got to tell you, Samantha, I'm very disappointed that Yellen Yahtzee, fantastic.
Yellen Yahtzee, yeah.
But Fed pause. You couldn't come up with an F word for pause?
No. Fed pause, Yellen Yahtzee. They are just, you can see them working in coordination. And that's what we don't have now. We don't have coordinated Fed and Treasury. We have Powell not playing at all in the same sandbox. So that's why we don't have the policy intervention that we used to have with the Fed and Yellen. We actually needed Trump to come in on April 9th and save our bacon by saying, okay, I'm going to delay them 90 days, which was the rest of the world tariffs. And then he comes in last weekend and says, okay, I'm going to delay the China tariffs 90 days. So now we're staring into the barrel of July 8th and August 10th when the 90 days expires. And what will tariffs look like then? It's one of those mercurial kind of moments, but the market is still pricing in that he will cave.
Yeah. Cool.
All
so
right,
what earnings do we got this week?
Yeah, shockingly not a lot, but some key critical earnings, I would just say from the retail standpoint, discretionary spending here important. So Home Depot, there's Tuesday, before the bell, and then Target as well, and even TJ Maxx here, TJX, before the bell as well. For those interested in snow, that will be Wednesday after the bell. But those are at least the main kind of earnings that kind of I'm paying attention to. Just look at the strength of the consumer still.
And the construction space too. I mean, Home Depot gets a massive amount of 2x4s imported from Canada. The tariff hit, the demand for remodeling, that's a big part of their business. The Pro Desk, the garden center, oh my goodness, is the best performing. Seriously, oh my gosh, I was there.
That's like my second home, I swear, these days now. So.
And they know that. So that's actually their best department, number one. So
yeah, go ahead.
No, I was going to say, so their guidance will matter.
Mm-hmm. Yeah. Decker's after the close on Thursday, first stock I ever bought. Okay.
Oh, wonderful. Mine was Autodesk.
Oh, hey.
2009. Henniker, New Hampshire. Oh.
Memories. Tickers and memories, right? All right, let's keep going. So in terms of just I'll go through a few kind of option key level Greek deep dives here for everyone, but the kind of key area here, from a gamma standpoint, are bullish zones, where dealers will kick in are 59.50 and above. Bearish zone from a gamma below 58.50. On the Vanna standpoint here, you start to creep back into positive Vanna, get that, fuel going at 59.70 to 60.50. And by that, I mean on a higher time frame, just to call that out. So that's a very, very important pivot there if and when we do get to it. So, and then the bearish zones, we've kind of talked about that. Both Vanna and Delta agree with kind of those zones. And Charm here, obviously Charm, wait for it, intraday to update. These are older values from last night. So obviously we've gapped down. So Charm will update here at the market open. In terms of key levels, I'm with Samantha, as we kind of hold the support level, there's a lot of continuation that can occur, right? Even above 6,000, we can push into 60.25, 60.50 on the XPX front as well. So I'll quickly pause. Happy to pull up any charts you have here, Wiz, if there's anything you want to add in, or Samantha for that matter.
No, I mean, I'll just talk a little bit about the Vanna chart that you have there. This is all expiration. Do you have the this week?
Yes, I do. Let me open that for you. There you go.
So that's really where that support area where it's a little bit below Samantha's 59.28, but that's 5,900, and that like green area there, that's where we have put support for this week. And you can dip into that put support. But if we do, that is, in my opinion, an opportunity to buy. And I do think that we can dip into it even today, right? And, it would be scaling in and stuff, because once you pass it, then, all bets are off. We could even, get down 5,800 is where I have we're probably going to go down to Samantha's 5687. So those are kind of like my levels to watch for. Like once we cross 5,800, that's when I'm going to go full bore into that like bearish 100-point drop. So that's kind of what I'm seeing here. I do think eventually we're going to fill that gap and eventually hit that 5687. It might be like mid-June, I think, is my most likely, but it could happen this week if we pass get below that support.
What's interesting, and I have to wait until we get regular trading hours, obviously, but just the pre-market gap down, it's obviously very dramatic in SPY land, but I've got an indicator. It's overreacting. And I don't know if this is really going to be the case, but it doesn't look so weak yet.
Yeah. Well, I mean, if you look at VIX right now, VIX is
under the surface.
Yeah, VIX is plus 2.5. And I mean, Jay, if you want to bring up spot vol correlation.
Yeah, bringing that up.
Yeah. So Samantha, just to explain this real quick, this is on a daily basis. This is the correlation between VIX and SPX percent change, right? It is very strongly correlated. Everybody kind of knows it. VIX goes down when SPX goes up and vice versa. This actually measures how much VIX goes down for every point, for every 100 bips in SPX, right? You could see up there, there's that vol slope. That is how much you could expect VIX to go down. When it goes down, when VIX goes up too much for an SPX drop, we call it over-VIXing. And when we over-VIX by 2 or more points, we know that, through our studies, usually within 3 weeks, it recovers that full gap. Back in the Trump tariff time, it took 4 weeks. So, but that
just the massive, just a tiny range is why, right?
and it recovers, percentage points. So, and it succeeded all but 2 times. I think what is it, 22 and 2. So, and that 4-week one I considered a fail because it wasn't within 3 weeks. So, so it's only supposed to be going down though. VIX is only supposed to be going up about 0.65 points for this 1% downturn, and we're up 2 points, and that usually creates a return of liquidity and a return in some put buying to create kind of a bounce. So this is when I'm looking at what VIX currently has and what our pre-market drop, I have a feeling we're going to hold your 59.28.25.
You mean get back above it because we're just a hair below it.
Yeah. Well, what I mean is we're going to hold it like by the end of the day, we'll close above it. That's my That's my thought. Yeah. So that's kind of where I'm leaning. I don't know.
Yeah, and remember the last time that these downgrades occurred, there were other things going on. It wasn't just the debt ceiling, which was a few weeks or a few months out. That 10% drop from July into November 1st was all summer, right? So this was a gradual drop. So we're not going to get drama. We're not going to get drama today or this week as it relates to, we need more. We need more of a macro trigger than a Moody's downgrade. That's all I wanted to say about that.
Yeah, I agree. Before we go into talking about our partnership, I did want to ask, what do you think, is there any market impact of Trump's trip to the Middle East, including which I think is being overlooked, lifting sanctions on Syria?
Yeah, I honestly, I said this publicly on Twitter. I don't talk about this with clients, but I think it's doing a deal with the devil. So I think the whole thing is short-term gain for long-term pain. And of course, you can take a look at the amounts that are being promised and what are Vegas odds we're actually going to get them. And then and I'm talking about, there are some outsized types of promises, 1.2 trillion, whether it's, 5 years or whatever. Per capita, it's, $300,000 per person. It's like, really, seriously, the GDP of these respective countries and the promises in investment is one thing to be skeptical about. The partners themselves and the concessions are something to be skeptical about. And then just what are you giving up is something to be skeptical about. So I personally don't like it, but I can understand why the market would. It's money, honey. So, it's at what, 25 of the top companies, strategic companies in the US had their CEOs there front and center to honor this partnership. I just think, or to benefit, obviously, from the partnership. I know the market's pricing in all of that excitement of future returns without really considering the risks. But that's why the market can head back up to all-time highs and push through it, is because he keeps coming out with, we're going to do this, we're going to do that. And the market wants to move higher. 80% of the time it does. So, we really do need a macro trigger to interrupt the bullish flows. And right now we have had a breadth resurgence, right, from that April 7th intraday low and the April 9th intervention, because yields were blowing out. And so we basically have now real buyers are needed to step in, not just the reflexive buyers and the quants and the price insensitive CTAs and vol strategies and all of that stuff that, really, really does create support. And then, of course, the algos responding off of all of this, all these headlines. But now we actually need real buyers to come in. And there is money that's on the side, they say, that has missed much of this reflexive V-shaped bounce. So that's what we need for them, is to come back in. I don't see a degradation of breadth underneath the surface. And I know, Jay, that you studied that as well. I see right now no selling underneath the surface. Now, when I start to see selling underneath the surface, price will not come down until it forms an air pocket of risk. And then it needs a trigger to prick. And then it goes poof. And the first time I saw that was in December 2nd, I saw the selling. December 18th, we had our 3% down day. I knew that was it, right? And then February, I saw the same thing. And then March, I saw the same thing. So the point is, we don't have yet the support broken in my indicators, and you're saying pretty much the same thing in yours.
Right. Yeah. For now, yes. Because
now.
Yeah, Jay can bring up some all expiration. I think that you see all that negative Vanna right there on and a lot of these are sold puts. We've been seeing a lot more people willing to sell premium, especially puts recently. As you say, 80% of the time the market goes up, and a lot of that time it's structured that way, especially even in the option structuring. It's designed to kind of continue. Portfolio margin is able to allow you to only not have too much margin, or I guess what's the word, maintenance requirement to advance your portfolio, right? But we've been seeing a lot more people willing to sell puts on all tenors. That is within a week, within a month, and then also, even longer term, people are selling puts. And that decreases Vanna exposure. And so I think when we get down past this 5,900, that air pocket right there, those big negative bars, a little bit further down there, Jay. Yeah, those big negative bars are going to create some real big issues for volatility. So
what are the levels on those big negative bars? I cannot see that fine print.
I gotcha. 5,700, 5,675, and 5,600.
Yeah. So once we get down to there, we're going to have to see some puts getting bought. And that's we probably will, because, these people who sell puts, they don't have a stomach for drawdowns because they can't afford them. One drawdown is worth like 4 successful trades. So they don't have very much appetite to to suffer drawdown. So when you get into that range, that's when you start seeing people buying puts, which usually creates like a last gasp down. And we see it in Vol.Land. We see when like those negative bars become positive, we start inching into those positive bars and we're like, okay, now's the time to buy. Sometimes it's like a macro catalyst and you need, Trump announcing that he's delaying tariffs and we go 10% in a day, which, wasn't expecting 10% in a day, but but you get that like gamma release kind of thing, right? So so thank you, Jay. I guess now, go ahead, Samantha.
No, I was just an excellent explanation. Thank you.
No problem. Jay, I know you have a hard stop, and right now Samantha and I are going to talk about our partnership. So I bid you adieu. Thank you very much for coming on.
See you, Jay.
Yeah, same here, Samantha.
Have a great trading week.
Well.
Bye.
Yes, you too. Bye-bye.
So, Samantha,
yes,
we have decided to join in a partnership that is so mutually beneficial for both of our clients, for both of our sets of customers. We've been talking about it for a while, and with your site, you gave me kind of like a free preview of your site, and I started clicking, and I'm talking to Mike and Hans and all these people that are on your site.
The contributors. Let me just kind of clarify that they're
sorry.
Yeah. No,
I talked to these contributors.
I'm not the only analyst. It's under my name. I'm the loudest. But, ultimately, these are folks that are full-time professional traders, analysts, and educators, and they support our members in our Slack workspace. So you came in and you can see all their contributions, trade setups, analysis. You can engage with clients. You can see what's going on as it relates to what we're providing also for some of the tools. So anyway, yes, you've gotten in there a little bit, and I'm glad you have, because you've also been adding value and showing members what you see. So that's very helpful.
I mean, I've been contributing on a guest channel for a while, but I was clicking. I was most impressed when I was clicking through each of the rooms, because you have 20, 25 rooms with just all different kinds of analysis that you can, it conjoin with everybody else. There's technical analysts. There's
you find your own people,
macro people. There's the oil. What's his name?
Bob,
oil guy, and
you,
Bob.
You got to find your own people. Like if you trade oil, I got somebody. Elliott Wave. I don't do Elliott Wave. Rithika does. If you want to chase, or the point is we cover all assets and time frames. So I want traders to kind of find who they most align with. Sometimes they just come from my macro and they manage their own book. Sometimes they want all the details. So yeah, this is basically the benefit of teaming up your analysis, interpretation of your tools. And then of course I'm going to keep doing my macro to micro thing, but I love it when it aligns. Then it's even more powerful.
Yeah. It's like, I feel, I went in there, it's like trading Macy's, I can get clothes, I can get perfume, I can get jewelry, I can get watches, and then when you put it all together, I look good. Right. So
I've never had, that's awesome.
So that's when I came on, I was very excited. And, I feel like our analysis is something that, that room fills in a gap. At Vol.Land, everybody who watches this show knows that Vol.Land does a lot of, we do very thorough option analysis on dealer positioning. I mean, there's a lot of sites that only show you one day, or, they do very broad assumptions. We do, we have the white paper that backs up our data and says, look, this is the one that's correlated. So, and we know how to use it too. So, on the banner the banner below, and in the comments in the YouTube comments, we have the affiliate link when joining LaDucTrading. Click on that one and use code VOL20, because then you get 20% off any LaDucTrading membership. So, so that's why we partnered with you. Why did you partner with us?
For that focus, subject matter expertise. I'm really, really into that. I want each of my, stars that are focused on their particular wheelhouse. They do it exceptionally well, to be able to offer that up and It's custom trade support for those clients that value that approach of the market structure. And not everyone will, right? Some are going to be, I only trade stocks on macro trend time frame. But the point is, your analysis is extremely robust and very detailed. I like the swing nature of it, not the zero DTE nature of it. Jay's golden. I know you have a team behind you, including Jill, but I mean, as far as traders as well. But ultimately, you also have a team, and you're doing the real trading with your subject expertise. And I am very glad that our members get to benefit from that. So thank you very much.
Yeah, no, it's a pleasure to contribute. They ask some very good questions too. And one of the things that when we started talking, one of the feedback that you gave us, me and, my team, and I took it really to heart, is this is very detailed. It's very robust data. That's great. People don't know what to do with it, right? It is, very...
it's sophisticated. It's sophisticated.
Yes.
It's hard to...
Yeah. So while we are going to work on some widgets, Vol.Land is a widget-based platform. While we are developing some widgets to make it easier, in the interim, released sometime today, probably, we're doing some final testing, is our learning management system, where we have over 30 videos of, and they're not long videos. They're, snippet videos. Well, okay, a couple of them are long, but we have snippet videos trying to boil down what we have and how to use it. So that, when you do sign up, you have a place to go, like a centralized place. It is on the Vol.Land website, Vol.Land. And you just go to the Academy under resources. And I think it's on the front page too.
Congratulations.
It is free. It is free to everyone. So, so you can learn. There's not many resources out there about Vanna. And there's not many resources out there about some other things that we do too. We do
with
have
the level of quality of data that you use. So it's good that you do explain, so that it's not necessarily intuitive, and you help people who are not necessarily in this wheelhouse. So good for you. That's a worthy endeavor. And that's part of the education, right? You got the analysis, you got the tools, you set up the trades, but you're helping other people figure it out too. Excellent. Speaking of people,
that's what we're doing. I don't know, Samantha, do you have anything on your site that's coming, or what
oh my God, too many things, which we talked about. We're adding portfolios for futures and income. So that should actually be this week. So we're kind of both trying to push through a lot of updates, which is painful until it's done. And it's a time-consuming process, but it has to be done. And, you're like, oh, okay, then the next project. But yeah, unfortunately, I have way too many fintech projects going on. I don't want to announce when they're going to be ready. I just want to have them ready and then announce. So we'll do one at a time. But the portfolios are rolling out this week. That's a good news. And we've got, summer trading, which will start to get a little bit more bumpy. And unfortunately, people will be exiting stage left, because usually it is slow and bumpy. But we got to be risk aware for July and August, because this mercurial president has a lot of stuff lined up for those 2 months. And I think people might get a little blindsided. So all hands on deck. We'll all be working together to interpret and navigate and deal with these interruptions, like a down draft on a Sunday night, which looks like it's probably going to get supported. But I actually have to go jump into my live trading room and commentate for 2 hours. So I'm going to say thank you so much, Jason. I wish you a great launch in your tools, and look forward to working together.
We'll be working together now for the foreseeable future. So
thank you.
Thank you, Samantha, and everybody else. May Vol.Land help you in your future trading ventures.